Dimitri, thank you very much for the opportunity to meet you and also to meet your viewing public. Here today we have a group assembled, which are my two sons and Mr. Harold Stein from Regent Investment Services, and we believe will present a capsule view of what we do and how we can be of service to you and your viewers. First of all, the Merrill Lynch Group, which includes Meniktas, the Meniktas Group, has 55 years of service with Merrill Lynch, and we manage a client base of $240 million, and basically we endeavor to provide services not only within the research of Merrill Lynch, but also have extended that service through the offices of Merrill Lynch to include other management companies. Having done so, we our group utilizes Regent's Investment Services, and that company is represented by Mr. Harold Stein today. I would like to turn the microphone now over to my son, Dean Meniktas, to give you a little bit more encapsulation of what we do, and then move forward in the program, because we really don't want to utilize too much of your program time. Dean, thank you for giving us your assistance.
Good afternoon, everyone. Thank you. And today, one of the things my father spoke about is a Meniktas Group. We work within Merrill Lynch, have a combined experience of 55 years, and offer a great many products and services, financial products and services to our clients. One of the services that is unique and many people haven't been fully aware of is the availability and the ability to hire some of the top money management firms in the United States. Merrill Lynch, through a very exhaustive process, interviewed many managers out of the thousands available throughout the United States, and selected 35 of the top investment management companies that manage the money of some of the Fortune 500 companies. And over the past several years, we have been able to offer those services to our individual clients. These money management firms manage, again, billions of dollars, and typically would not accept a personal account from an individual for less than $500,000, and in some cases, some of these managers as much as $10 million. That, through Merrill Lynch and the marketing ability and the arrangements we have with these managers, are available to clients for $100,000 minimum. It's a very unique product. It's a very unique service. It's a customized service that we've used for many of our clients. Today we've asked Harold Stein from Regent Investor Services. My brother Michael, I'll be turning it over to, will be interviewing Harold, getting some viewpoints on how his company operates and manages money for their clients, and also their outlook on the economy. Michael?
Thank you, Dean. Harold, again, thank you very much for making it out here in the San Francisco Bay Area and spending some exclusive time with us and the viewers of the Greek TV. Harold, as my brother indicated, is the senior portfolio manager for Regent Investor Services, which is a $9 billion investment money management company. Some interesting background on Mr. Stein. Before joining Regent's Investor Services, he was the Vice President, Senior Officer of Chase Bank and Trust Department. He's received his Bachelor of Arts from Hofstra University and his MBA in Finance magna cum laude from Fairleigh Dickinson University in New Jersey. And obviously towards the beginning part of his career taught security analysis at Pace University and is a member of the New York Society of Security Analysts. Harold, we're just going to dive into the program here with what probably everybody is wanting to know. We have a few questions, but to start off, basically, how does Regent Investor Services manage its portfolios?
Well, thank you, Michael. It's a privilege to be here. And basically, we have a very unique style at Regent for managing our funds. We are considered to be a top-down sector rotator. And all that means is we do a lot of macroeconomic work. We take a look at what the long-term secular outlook is going to be for the economy for the next year to 2 years. And based on that, we then try to ascertain how can we get that most return for that least amount of risk for our client base. So we start off, again, with the secular outlook, where we are in the cycle, and which has become much less cyclical as of late, but we're also taking a look at valuation and earnings momentum. And then we massage and create a portfolio to protect risk, protect the principal of our clients' assets, and continue to deliver that most return in any given environment. In terms of what we're seeing at this point in time, is basically really more of the same. Worldwide growth, tremendous competitive pressures, but with the technological revolution that we're going through, we're able to become more productive and keep inflation down. So the outlook is very positive from a financial investment standpoint, and we are positioning our portfolios to some extent toward economic sensitivity, those sectors that as the world economy expands will continue to do well. That would include technology stocks, capital goods stocks, financial stocks, and consumer services. Probably one of the most difficult things that we have to grapple with at this point is the fact that the market has made a sustained movement here and is no longer necessarily inexpensive. When we do evaluation work, we take a look at the S&P on both a cap-weighted and an equally weighted basis. And a cap-weighted really indicates that larger companies have a tremendous impact on the S&P itself. But if you take and examine the S&P on an equally weighted basis, perhaps the 450 stocks that have not been performing as well as the 50 largest stocks in the S&P look particularly attractive to us at this point in time, and we find real value there, which includes the financial service sector and the consumer cyclical sector and the capital goods sector in particular.
Harold, everybody's excited about the stock market and how it's gravitated upwards. How, as a senior portfolio manager, how do you hedge the potential losses that incur in a portfolio as what you manage?
Well, and protection of principal is very important to our clients, and we utilize a number of risk control devices within our process, one being that we will never weight our portfolios from a sector standpoint more than 2 times a comparable S&P weighting. And secondly, we will never have really more than a 5% position in any one individual holding. In this way, we can build in the return, but diversify the portfolio and control risk by doing so.
How would you estimate any future interest rate increases on the stock market generally, not getting specific here because we only have a few moments, but your overall estimation of how that may impact the market, perhaps the bond market?
Well, it's always difficult to try to project what interest rates are going to do, and since 1981 we've had a long-term secular decline in interest rates. For those that could remember when the Reagan administration came in and tried to choke off inflation and pressured rates up at that point in time to slow the economy, we had 20% Treasury bill rates and 16% intermediate government rates at that time. And since then, we've had a long-term secular decline, which resulted in 30-year Treasury bill bonds going below a 5% rate, and now have backed up to where it's yielding in the high 6% range. So we have certainly seen some volatility with interest rates, but we feel the key is because of new technology and worldwide competition, and if the internet is the next frontier, which we think it will be, these factors will tend to hold interest rates near these levels, and perhaps over time to see them come down slightly lower. So that would bode well for the financial service stocks if we do have a reduced interest rate environment.
3, 2, 1.
Dimitri, thank you again. And for your viewers, we would like to make available to them Merrill Lynch's special report for investors entitled 2000 the Year Ahead. Please feel free to call us at our phone number at Merrill Lynch in Oakland at 510-208-3856, and we will be happy to mail out a free copy of this publication. If you have any questions regarding the Merrill Lynch Consults program, of which Regents Investor Services is a part of, we'd be more than happy to chat with you and mail some additional information out. Thank you.